GM guys, good morning, good day, and I hope we are all doing well. It's another episode of the live section, and we are here again today. I hope you all enjoy your night rest, and I hope you are enjoying your daily to day activity. And today we are going to be talking about the entry mechanism and trade execution. This is just like the part 2 of what we did yesterday, because yesterday we did talk about mastering entry types and perfect trade execution. Those are the things we mentioned yesterday, where I taught you about the 4 major entry types that we have, like the breakout entry model, the pullback or retest entry model. We also have the continuation entry model, and as well as the retest entry model. I also made mention of how you can identify high probability setups, like using your price action, support and resistance, trend lines, and as well your candlestick. We did talk about your order limit as well, how you can make use of the market limit, your order limits, such as the buy stop order limit, the sell stop order limit, the buy limit, and the sell limit. We did mention all those things yesterday. We deliberated on it, and I did showed you some chart work yesterday. And before I ended the live section yesterday, we placed a trade together using all what I have explained that yesterday. But then the trade did not really go well, and I've always said that losses are inevitable, right? And with that, we are going to be going straight into today's topic, which is entry mechanism and trade execution. So basically it's just the wider part of what happened yesterday. So I will encourage you to just do what? Grab your writing tools as we dive into today's education section on entry mechanism and trade execution. See, these are the 2 of the most important and critical skill that determine trading success. Whether you are day trading, you are a swing trader, or you are scalping stock, you trade forex or crypto or future, you need to learn precise entry and efficient execution. You get it? This can dramatically improve your winning rate, your risk to reward ratio, and your overall profitability. You understand me? So we are going to be dividing all those things into 4 topics today, and which one of them is, we are still going to touch high probability entry mechanism, price action pattern, breakout versus pullback, versus reversal strategies, and as well as news or catalyst driven entries. We are going to touch that. We are still going to speak on how to time your entry for optimal edge, like confirmation signals, multiple time frame alignment, and avoiding false breakouts. When you are trading, you actually experience all those things, something like a false breakout and continuation signals. You are going to experience all those things. You are going to see them on the chart. And while we are still going to dive into today's section, I'm going to be touching them on my chart, and we're going to be seeing them together. And right there, I have the Solana USDT chart in front of me, and you can see what is currently happening there. We have so many information down there that I have just mentioned, and as well in this section today, we are still going to talk about trade execution, like market order versus limit order. In case you were unable to grab all those things yesterday, we are going to talk about the stop orders, how to handle slippage and spread, and choosing the right broker. And you all know that we've already chosen our own right broker, which is the L-Bank trading app. That is the broker we are using. And as well, your order flow insight and platform for specific tips. You get probably the platform that will help you in calculating your lot size, your leverage, your risk management. And also we are going to be talking about integrating risk management at your entry, such as your position sizing, your stop loss placement, and your take profit strategy. And as well, we are going to be talking about how to trail your stop loss, and how to handle your over trading entries, emotional execution, and your poor liquidity. Those are things that we are going to be speaking about on this live section today, and we are also going to be doing some nice chart work today. So sit back, relax, grab your writing tools, and let's go straight into today's business. So I'm going to be starting today's episode from high probability entry mechanism, and I'm going to be breaking that down into a simpler form, building on what we discussed yesterday. And if you were present on this live section yesterday, you will notice I made mention of 4 things for you to identify your high probability setup. For you to identify your high probability setup, you need what? You need your nature, your continuation, in which we dealt with yesterday. You also need your candlestick pattern, and as well, you need your what? You need your approach. So here on my 4 hours time frame, I'm going to show you what the nature looks like, while we are going to pick the price action pattern, the price action entry pattern, and as well we are going to walk along with the continuation, probably the breakout or the pullback, the retest or the reversal strategy. It all depends on what we are going to see on this chart. And if you look at my chart very well, you will see I already took an entry on Solana USDT, which is currently reading at +6. So who else gonna see how I did place this trade right here? So I'm going to zoom in now, so we can all do what? We can all state what is currently going on this 4 hours time frame. All right. I did mention that if you are working with your nature, your nature is divided into 4. We have trending to the upside, trending to the downside, moving sideways, and choppy markets. Those are your market nature. Trending to the upside, that is, we are bullish. Trending to the downside, that is, it is what? It is bearish. Moving sideways, that is, you have to be moving from your support to resistance, your resistance to your support. And as well, choppy, that is, it doesn't really just have that direction. It might just break your support level, return back to the zone, break your resistance level, return back to the zone. You cannot just determine within yourself where the market is heading. You just know that something is just happening around you, right? But in the case of what we are looking currently on my chart, we can say the market is moving sideways. You look at it, you have your resistance level and we have our support level, and you can see that the market is now moving in between the resistance to the support level. I'm going to label that so that you will not be lost in what I'm trying to explain. Yeah, so let me label my resistance and my support level. You see, knowing how your support and resistance level works will actually will actually help you in knowing your market nature, because most times when this thing is happening, immediately you can cite your resistance and support. You already solved one of your problems. So this is the resistance level. Okay, and this is our support level. Yeah, so with what I have just highlighted on my chart now, you can see that we are moving sideways. It's going sideways. It's not trending to the upside, neither is it trending to the downside. But inside that are support and resistance level, what do we have there? You will see the trend inside that place. So one of the first trend you need to cite is this trend right here. This trend to the downside, and as well this was to the upside, and this trend to the upside. So inside that our sideway, we have what? We have trending up and trending down. So from what is happening currently, after we tapped into the resistance level, you're gonna see that we started doing what? We started falling to the downside aggressively, massively. You can see the nature of markets right here is different from what was happening here before, and is also different from what was happening right here before, when we were forming low high and low low, and this was forming high high and high low, high high, high low, high high, and then we started coming into the zone back. Now, since you've already identified your nature now that we are moving sideways, you already have the mindset that when we get to the support level, we are going to be waiting for a reversal pattern that is now going to do what? That is going to preach to us that we need to do what? We need to go to the what? To the resistance. That is, we need to change our focus to being bullish, and we are now going to be doing what? Looking for a continuation to the upside, right? So now, looking at this now, we've discovered our nature. So how do we know the price action pattern that is inside here, inside this point now? All these things you are looking at, I mean this high high, high low, high high, and the high low that was created, this is a price action pattern, because it wasn't impulsive. It was moving to the resistance corrective. Assuming we trend to the resistance impulsively, we will have been considering another thing. So this movement already preached something to me, that this is a kind of what? A rising wedge to the resistance level. And whenever you have a rising wedge to the resistance level, the thing that should be in your mind is that with time, this market is going to start falling to the downside. Are you getting it? This whole thing is going to later change, and then we are now going to be bearish in nature. It's not going to be bullish anymore. Do you get my point? Because what? Because we are not doing what? We are not moving impulsively to the upside. Yeah. So having all this together now, we started the bearish movement and we started doing what? Trending to the support level. The nature here is different from what was happening here before. You can see we have all this massive movement to the downside. Now we moved to this point with what? With a reversal pattern, and we started what? We started the buy to the upside because we already did what? We already tapped into our support level. But mind you, there is a what? There is a sell hunt right here before the market turns back, and then we move back into our zone, which was what? Moving to the sideways. And this is another what? This reversal pattern you are looking right here, I mean this whole thing here, this reversal pattern is part of the price action patterns that we have. And if you look at what is happening currently now, we also have another what? We also have another price action pattern. This is what? This is a rising wedge. Now this is invalidating the reversal that we had previously for our bullish trend. Now you probably understand what I'm trying to project to you now. Finding a high probability setup using your what? Using your market nature price action patterns. I've mentioned two patterns so far, the falling wedge and the rising wedge. So this is the falling wedge that is preaching to us that we need to start doing what? We need to start buying. And you can see we started buying because we have the what? We have a continuation to the upside above the support level. Whenever we trend and return back into the zone, you have your support level. All you should have at the back of your mind is what? Is to continue the trend that has already been started. If you don't have that in mind, you are going to be seeking for buy because you already have in your mind that the market is bearish. So you are going to be missing out those opportunities that you're not supposed to miss out. So I'm going to show you the continuation that happened, which is going to be what? Either the breakout or the pullback, the retest entering continuation, or the confirmation entering continuation that happened day before yesterday on this particular pair. So let's go to our 1 hour time frame so that we can see that very well. So here is the continuation to the upside that happened, and don't forget you have your what? You have your support level here. So basically this continuation happened retesting the support level to turn it into the resistance, and that was how we start trending to the upside. You can see it. You can see how effective this thing is right here. It was printed day before yesterday, and it all moved off from this point to a valued area there. All right, so this was the entering point for this particular trade. You have your what? You have this engulfing bar on the trend line, and you are to enter your trade right here, and your SL below the trend line this way, and you have 1 is to 3.8%. That's basically how to use it. That's how to do what? To cite your high probability setup. Now I have touched the price action pattern. I've also touched the continuation you need to look for before you get into any trade. The continuation you need to look for. The candlestick you need to consider, because I just mentioned that before you do anything, you need to consider your candlestick pattern as well. So it's what just happened right here. I made use of the engulfing bar on this particular trade that I just showed you. and made use of the engulfing bar. So with that viewpoint of mine, I know we've all understand what I'm trying to show you on high probability entry mechanism, price action, breakout, or continuation that you need to consider before taking any of your trades. So I'm still going to have to talk about reversal strategy. Let me label it so you can see what we mean by reversal strategy. This is a reversal. This is a reversal strategy. And how do you know that this reversal is complete for what? For trading. I'm always saying that whenever you want to start your reversal, you need first something to consider. Inside that reversal, you are going to have 2 to 3 bottom and 2 high. 2 high. I mean 2 low high and 3 low. Sometimes it might just be 2. In the case of this one now, it was just 2 low that we have. This is the first low right here, and this is the second low right here. And how do you confirm that this reversal is ready for trading? You still need to do what? You still need to wait for your continuation, because you cannot catch the top. If anything can happen here, so you catching the bottom right here is just like you risking your portfolio. So all you just have to do is to wait for the first impulse, and then you have your correction and you enter for your continuation. That's basically how reversal strategy works. And talking about news catalyst driven entry, you see, one thing I want you people to understand is that when it comes to news or catalyst driven entrance, you need to understand that there are points that investors come into that they push the market from there. They can decide what is going to happen in that particular area. So the best thing is to do what? To know all these points, so you can join the big guys in doing what they just want to start doing. Are you getting me? So one thing you should understand is most of this continuation entry that we've talked about are always the point of interest where most investor comes into the market to move the market. One thing you should know is somebody will always start the trend. Somebody will always still come to do what? To continue the trend. Like what is happening right here now. This was a valid area where this market tapped into before it rejected. And the reason why it's a valid area is because that is a demand zone. This is a demand zone. So you should know that an investor is going to, the market will surely go back there, and a whale or probably an investor is going to invest in that point to push the market higher or lower. I'm not saying they will have a particular entry and a particular market trend they are going to push the market. But one thing you should know is two things is always happening there. They might decide to push the market lower, and they might decide to push the market higher from that point. So having this thing in mind is going to help you know the perfect entry when it comes to news or catalyst driven entry. and you can see immediately the market tapped into this demand zone, we started selling to the downside. And that is how you now look for what you now look for one of the entry model we've discussed about to do what, to get in and join the big guys in doing what they are doing. So that's that about high probability entry setup. Mind you, I have talked about the price action pattern, in which I have mentioned two so far. I mentioned the rising wedge, and I as well mentioned the falling wedge. I mentioned the continuation pattern, in which we use the what, we use the retest continuation entry model, and as well I've talked about the reversal pattern. As we continue in this section, if I see any other reversal pattern, I'm still going to do what, I'm still going to talk about it. And I have also talked about the news or catalyst driven entry. So now we are going to talk about how to time your entries for optimal edge, something like the confirmation signal, the multiple time frame alignment, and avoiding false breakout. We are going to talk about those ones now, and I would love to start with the multi-time frame alignment. I would love to talk about that first. So we are going to be starting with our daily time frame, because you need to know how this trend works. That is how to combine your time frame together. That's how to combine everything together. So this is it on what? This is on Solana USDT, right? This is on Solana USDT. What are we seeing on our time frame? On our daily time frame, we have a lot of information right here. So on the long run, we are still bearish. Looking at this chart like this, I can tell you that on the long run, we are still bearish on Solana USDT until we feel this support level. That is when we are going to now decide whether we are going to change the trend or we are going to continue being bearish. So let me highlight something right here using the price action pattern, the breakout, the breakout entering model, and as well as the reversal strategy. So let's see what we have here. We have this previous resistance right here. We have this previous support level as well. Sorry about that. We have this current resistance that has not been filled up. And as well, we have this support level. If you know the law of price action patterns, you will know that whenever we create a support level or a resistance level, it is a must for us to feel that thing. And that is the reason why we now have what? We now have the 90% rule. The 90% rule is just what I just finished stating, that whenever we have any reversal pattern, any price action pattern, the resistance or the support level must be filled before we start thinking of anything else. So right on this daily time frame, we have two price action patterns. Sorry, we have two reversal patterns rather. We have two reversal patterns, not price action patterns. We have this. This was the first one, and we've not done what? We've not filled that resistance. Now we created the current one, which is now this one. Now I think what is now going to happen on this daily time frame is that we are going to trend to the 90% rule of this current reversal pattern, because this is a rising wedge and we must feel the support level. And I think after feeling that support level now, we are not going to do what? We are now going to move back and feel this upside here. Without doing all those ones, we will not be able to do what? We will not be able to do anything. So currently now, looking at what is happening here now, you will notice that because of this previous support level that we have here, the market start doing what? The market starts moving sideways. The reason why I'm doing all this is because I want us to know about multi-time frame alignment. Multi-time frame alignment. So this is what the daily time frame looks like on Solana USDT. So we need to break this support level now to come and fill in the 90% rule of this reversal pattern that was just being created. Up to the 4 hours time frame, we are done with the daily time frame now. So this is the 4 hours time frame. Yeah. Don't forget, on our daily time frame, what are we seeing? We are seeing the bearish what? We are seeing the bearish nature of this current trend. So what should be on your mind on the long run is what? Is the bigger picture that you are seeing on the daily time frame, which is what? Which is to sell. So everything you'll be looking after is looking for a reversal, what? A reversal pattern that is now going to give you what? A price action pattern that is going to serve as your continuation. I hope I'm not rushing that. I was saying that you have your bigger picture in mind, which is on your daily time frame, that the whole nature of Solana USDT is bearish. Now you have that written down. You move to your 4 hours time frame, and when you get to your 4 hours time frame, what should be in your mind is what? Looking for a reversal pattern. One of the reversal pattern that we are working with currently to sell to the downside is this rising wedge that we have on our 4 hours time frame. This is a reversal pattern because you can see we have this rising wedge to our valued area, and we started doing what? We started trending down, and that was how we were able to do what? We were able to find the price action pattern. Let me show you what price action pattern looks like on my 1 hour time frame. This is a what? This is a price action pattern, and price action pattern is always a continuation of any trend, either moving sideways, trending to the upside, or trending to the downside. Price action pattern are always a continuation for that, and you can see we already use that opportunity to sell the market. Do you get my point now? So you now see that I have combined my daily time frame with my 4 hours time frame, and now I have cited my price action pattern on my 1 hour time frame. Now we are now going to use the 15 minutes time frame as our entry model, so we can do what? We can get in this trade very early, and that is the reason why we have this right here. Your 1 hour, your daily time frame is to show you what? The bigger picture for the long time trading. Your 4 hours time frame is for you to do what? To look for your reversal pattern that is now going to give you an edge that the picture you are seeing on your daily time frame has done what? Has started playing out, so that you can do what? So that you can start looking for opportunity. And by the time you now find that reversal strategy, you are now going to be looking for your what? Your price action pattern, which is now going to give you an edge And the last step of that is you using what? Using your candlestick confirmation. So I did mention on my live section yesterday that I do use 4 candlestick patterns, in which I mentioned the hanging man, the pin bar, fully closed pin bar, and as well I mentioned the engulfing bar, and I mentioned the morning star and the evening star. They all work together. We are going to see the morning star at the bottom, like at your support level, while your morning star is always at the resistance level of every movement, either bearish or bullish or sideways. So sorry for that little break. I needed to quickly fix my system camera. I was locked out of it, and that was the reason why I paused a little. So I was talking about how to use your time frame, multi-time frame alignment, in which I have just finished talking about that. I told you guys about having your bigger picture in mind, which is on your daily time frame, then looking for a reversal pattern on your 4 hours time frame, which is going to give you an edge to your price action pattern, and from that you'll be able to use your candlestick formation to do the necessary thing you need to do. Okay, so now talking about avoiding false breakout. Okay, so let me show you what false breakout looks like. Okay, I think I just found one. We'll be able to see that very well on the 1 hour time frame. So this is something like a false breakout. Let me highlight that. that is a false breakout. Even right here is a false breakout. This is also a false breakout. I have some people that whenever they cite their resistance and support level, immediately the market breaks out of that resistance level, they are going to place their buy and they are going to have their stop loss below below their resistance level. See, one thing you all should understand is that whenever market is at your resistance level or your support level, two things will always happen there. Is either the market rejects from ground point or the market continue the movement. I mean, the movement is used in breaking any of those points, both support and your resistance level. So entering a breakout point there, entering your buy or your sell at the break of your support level or your resistance level is very wrong, very, very wrong. So you need to do what? You need to quit the act of entering your trade at the break of your support level or the break of your resistance level, because anything can happen. So instead, wait for any of the continuation pattern, I mean any of the price action pattern that is going to give you an edge that, okay, immediately this broke the resistance, we have a bull flag, and from that bull flag you now did what? You placed your entry and you started trending to the upside. That's basically how to avoid false breakouts. All you just have to do is to wait for your continuation that is going to give you a confirmation that the trend is still continuing to the upside. The trend is not reversing anytime. Do you understand that now? So we've touched multi-timeframe alignment. We've also spoken about avoiding false breakouts, and as well on our first topic we talked about how to identify high probability entry mechanism, where you need to do what? Where you need to use your market nature. After you use your market nature, you make use of your price action pattern, you make use of your reversal strategy. You also do what? You also cite news or catalyst driven entry. Now we are now going to talk about confirmation signal. Confirmation signal. And what does confirmation signal really mean? Confirmation signal is just simply an edge giving you a confirmation to a previous trending market nature. I don't know if you get that. I said a confirmation signal is an edge giving you a confirmation to the continuation of a previous trending market nature, and I'm going to show you that right away here now. So let's combine all this to find our high probability setup, while I will be explaining confirmation signals. So we have this on our 4 hours time frame, and probably let me just take price back in what? Let me just take the price back to where we have our rising wedge. All right. Okay. So let's assume you open your chart. Let's assume that you open your chart, and what do you have? What are you seeing? You are seeing something like this. Let me clear all this. Let's use it that way. Let's use it that way. So you opened your chart and you already highlighted your demand zone. You've done the you've cited your reversal pattern. Now one thing you are waiting for is what? Is a confirmation that this trend wants to start doing what? Selling to the downside. This trend wants to change to bullish. Mind you, this is just a reversal pattern, and this is a rising wedge, right? Anything can still happen at this point. I mean, at your demand zone that you just highlighted. So let's take that to the 1 hour time frame. You are done with your 4 hours time frame because you already cited your reversal strategy, your reversal point. Now you have this already. Now let me show you something, because some people will just get in here and then they start selling to the downside, which is very wrong because this trend is not confirmed yet. This trend is not confirmed yet. Because you already have a reversal doesn't mean the trend has started. No, it is not. You still need more confirmation, and is that confirmation signal that we now want to talk about now. Let's assume you get in here now because you don't want to wait, you don't want to confirm that you already have your candlestick formation there, and that is close to your demand zone. So you place your entry here, and then you place your SL above like this, and your target is at this point, or you are targeting the 90% row of this structure here, of this reversal pattern here. So let's play that and see what happens. So you got tagged in, you started moving, but the movement is not really sharp. And what happened next? That is what? That is your stop loss there. You will just be taken out just like that. You see what just happened right there? You saw it, right? That is how you were taken out of what? Out of SL. So instead of risking this, yesterday I said something on this live section that we have two types of entry. We have the risk entry and we have the reduced risk entry. This is a what? This is a risk entry because you are at the top of the structure. You are not waiting for confirmation signal to get in, so you are just risking it because you feel you already have one edge of your trading plan, and you just think that you can ignore the rest. You cannot ignore the rest, because if you don't do it the way you have to do it, you're gonna learn the hard way. So now you are taken out of stop loss this way. So let's now assume you are waiting for confirmation. Fine, you have your reversal pattern already, which is what? Which is rising wedge. You still need the first bearish nature to confirm that your movement is ready, and that is the reason why we had to wait for some movement like this, and we started doing what? We started forming a price action pattern. So you have your what? You have your rising wedge to your demand zone. You have the first impulse down that was already giving you another confirmation. That is one of your confirmation signal that is going to give you an edge that your reversal pattern has started playing out. So you need to wait for all this for you to see your price action pattern, which is now going to serve as your continuation to the downside. So we started playing that, and you did what? You have this now, and that is how we got to where we are now on Solana USDT. So I hope we've picked something there. How to cite your confirmation signal. You need to wait for your what? You need to work with your reversal pattern, and after working with your reversal pattern, you need what? You need your first nature, which is probably the bullish trend or the bearish trend. And after you find that, you need to work with your what? You need to work with your price action patterns, which is either the bull flag, the bear flag, steep pattern, timing flag. I make use of those four: the bull flag, the bear flag, the steep pattern, and your timing flag. Like this now, this is a bear flag. This is a bear flag. This thing forming currently on our 1 hour time frame is a bear flag. I hope you've jot that then, and let's continue to market order versus limit order versus stop order. Or I think I should actually touch something like the way you place your stop loss placement, your position sizing, and taking profit strategy. I need to touch that before we now move to how to set your order limit, and as well how to manage your slippage, your spread, and choosing the right broker. So let's go to placing our stop loss and taking profit, how to manage your trade, and how to set yourself free from risk. All right, Samuel Essien, I just got your comment now. You said I should take the multiple time frame alignment again. Okay, I'm going to work on that right now before I move to the next point. And if you are with me, you can still tell me in the comment section that you are with me. So I'm going to take the multiple time frame alignment again. I'm going to explain that again right now. So let's get to the chart work. Let's get to the chart work. So I made mention that for you to get your multiple time frame alignment, you need to do what? You need to start your analysis from the daily time frame, and this is actually basically for day traders or probably the swing, so that you can know when to get in and hold for you to get to the 90% rule of anything you are seeing on your daily time frame. So for you to do that, mostly people that they trade or probably swing, they hold trade for a very longer period of time. That's the reason why they make use of their daily time frame. They really need to understand what is going on there. Are you getting my point? So I told you that while on your daily time frame, you still need to make use of all the things that we've been discussing. You need to make use of your reversal pattern, your price action pattern, your support and resistance, because that is your support and resistance is going to be the main thing that is going to give you a very good edge to know where the market is heading to for the next 1 month, the next 2 months, the next 3 months. So taking Solana USDT for a case study, which is what I have on my chart right now, you are going to see that I did have my resistance level here. Let me label it for you. I have my support here. So I was also saying that patterns create what? They create reversal patterns, create resistance and support level. So this is a falling wedge and this is a rising wedge right here. Let me label this as well. and this is what? This is rising wedge. So I mentioned that whenever a reversal strategy or pattern is being printed in the market, they create support and they create resistance level. Do you get my points now? And one thing is, if you start trending from the support level, your resistance level must be filled before anything happens. That is the 90% rule of every reversal strategy. And now if you create a rising wedge, now we've created a falling wedge to the support level here on the daily time frame, and now we've not filled the resistance level. You now see that the market keeps doing what? It keeps moving sideways. Do you get it? The market keeps moving to the side. Now, why the market keeps moving to the side? We printed what? We printed another reversal pattern, which is now serving as what? As a rising wedge for that point. And now, since we've already created a new reversal pattern, we must fill the 90% of that pattern before we start any other journey. And that is the reason why we are waiting for the daily time frame to come and do what? To come and touch the support level. Do you grab that? So now, since you now have the mindset that this is coming to fill the support level, which is the 90% rule of the rising wedge, now you must have it in mind that on your daily time frame you are bearish. Now you need to go to your 4 hours time frame to seek for opportunity in alignment with what you are seeing on your what? On your daily time frame. So now let's take it to the what? Let's take it to the 4 hours time frame. Now I told you that since you already have an edge of what is going on the daily time frame, you need to go out. You need to get the information on the 4 hours time frame. So what are you looking for on the 4 hours time frame? You are basically looking for an opportunity to sell. And for you to be able to get all those opportunities to sell in the market, you need to consider what? You need to consider the market nature. Is the market nature matching with what I see on my daily time frame? What you are seeing on your daily time frame for this particular pair is what? It is bearish. Now, anything you are looking for in your 4 hours time frame should be in what? In alignment with what just happened on your daily time frame. So you are looking for a nature that complements your daily time frame, and that is where you'll be looking for a what? A bearish nature. And for you to do what? For you to see that bearish nature, you need your reversal pattern as well. You need your reversal strategy, just like what is happening currently here. We already have it on our daily time frame that we are bearish. So we took what? We took our reversal pattern into consideration, and that was how we have this what? We have this rising wedge right here to the what? To the demand zone. And what did we waited for? We waited for what? We waited for a confirmation. What is that confirmation we waited for? We waited for that rising wedge, because whenever we rise to the top, we must fall. Whenever we fall to the down, we must rise. So since we already rose to the demand zone, we need to wait for the first nature that is going to give us that the market is what? The market is bearish, and that is how you have this what? You have this your nature, this your bearish nature. Are you getting it now? So you've confirmed your bearish nature on your daily time frame, on your 4 hours time frame. Now you need to make use of your 1 hour time frame. You can see how we are moving bit by bit. What you need your 1 hour time frame is what? Is for you to be able to cite your price action pattern. That's all you need your daily or your 1 hour time frame for, and for you to see the bigger picture of what was happening on your 4 hours time frame. So you have all those things gathered together. Yeah, you have your nature here, which is the bearish nature. Then you have your what? You have your price action pattern, which also serves as what? As your continuation pattern for the trend you already had in mind on your daily time frame that you confirmed on your 4 hours time frame. And the reason why we always use the 15 minutes time frame is because of what? Is because we consider it as our entry time frame. We don't do anything on the 15 minutes time frame. All we just come to the 15 minutes time frame to do is to search for entry. It's just for entering, nothing else, nothing much. I hope you understand the multi time frame alignment now. If you do understand that, kindly drop a comment so I can be sure you already understand what I mean about multi time frame alignment. So thank you. I hope I answered your question again. So back to integrating risk management at entry, such as position sizing, stop loss replacement, take profit strategy, and trailing of profit strategy. Let's dive into that now. It's going to be over 4 hours. So we are going to be taking position sizing first, but then let me check for another pair that we haven't gotten any entry on them. BTC. Let's see whether we have an entry on BTC so that I can use that as a practical for us, so we can understand position sizing, stop loss placement, in case you are new to this. Oh my goodness. Nah. We cannot use this. Neither can we use this as well. And if it looks like we are not going to get anything for that, I will have to take price back to where I think we can find a better one, so I can show you how to place your stop loss. Most times position sizing is being used by forex trader, indices trader. Those are the people that basically use position sizing. If you are trading crypto, you don't use position sizing. What you use is leverage. You have the 10x, you have the 20x, you have the 30x. You just have, let me just say, you have from 10x to 100x. So that is going to serve as your position sizing. And when it comes to placing of stop loss, as a trader, you need to know how to place your stop loss. You need to know where to place your stop loss. Some people don't even use stop loss, which is very, very bad, because you are opening your trade to a lot of danger, because anything can happen in the market nature. The market might just decide to spike now, and if your portfolio is on cross, your money is gone. So I'm going to be touching that now, and we're just going to see how it's going to go together. I think I can still use BTC for that, but BTC has not filled this point, so it might not really go. But for the sake of this lecture, let me just do that right now. I've been talking about how to cite your high probability setup already. So we are just going to take this as a continuation, and where we want to do our position sizing and stop loss placement. So I'm going to consider this as our this is our reversal strategy, because this is what? This is a rising wedge. Yeah, and we're tapping into what? We're tapping into our valued area here. So we have our nature confirm, which is bearish, and we now have this right here. So let's go to the 15-minute time frame. Okay, so this is how to do your position sizing, stop loss placement. We want to sell this market now. You need this your you need this your short position. Yeah, so you are going to place it at the close, at the break of this. Before we go to that, let me put you through something. Whenever you want to enter your trade, you make use of your candlestick pattern. I gave 4 already: the pin bar, the engulfing bar, the hanging man, the morning star, and the evening star. That makes it 5 now, right? You have to locate those things at the resistance of any price action pattern you want to take. Are you getting it? If you don't have them, then you are now going to use the breakout entry type model. So on this trade now, we are using the breakout entry type model, because we could not get any reversal candlestick at the top of this pattern. So we are using what? We are using the breakout entry type model. The reason why I categorize this as the breakout entry type model is because this is the break of this continuation pattern. This is the breakout. This is the break of this entry type model. So this is how you place your SL. You need your SL above this structure. You still need to give this structure a room. Are you getting it? You need to give it a room. I mean, because the price might just come up, form a double top, and start selling to the downside again. Are you getting that now? So you still need, you just place it above your structure. Assuming this market is buying to the upside, it's going to be below your structure. You start thinking now. So this is basically how to do your what? Stop loss placement. So let's now assume you want to place this trade on your broker now. I mean your trading app. Your take profit should always be at the 90% rule of the reversal pattern you are using. This is our 90% rule. So that's about 1:2. Yeah. So this is how you copy it. You copy your tools from here. This is your stop loss. Then we'll take it to our broker. We are going to put in it here, stop loss. Now I'm taking how to place your trade as well. Trade execution best practices. I'm taking that alongside as I'm taking this stop loss placement, because we are about placing the trade now. We are about placing BTC USDT, and this we are using market price. We are not using limit, because we want to enter at the breakout of that structure. Do you get my point now? So this is where you are going to place your SL. This is it, SL trigger price. This is the place you are going to place it, and as well your take profit. You are going to place it down here. And now position sizing. is very important. Now on this particular trade now, you want to risk $100. So how do you do your position sizing now? Mind you, this must always be on isolated mode. Don't put it on cross mode. It must always be on isolated mode. The reason why it's on isolated mode is that if the market goes against you, it's not going to cross and enter your portfolio. It's going to take the exact amount you are risking on that particular trade out of your portfolio, instead of risking and putting your portfolio in a big danger. So this leverage now, I want to use 100x for this particular trade now. So I want to use 100x for this particular trade while I am risking $100. You can see now that I'm only seeing about $284 here. Let me reduce my leverage. It's too much. Let's take it down to 80. I need to move that leverage to size. That's 89, and that's $70. This is how you do what you size your this thing. You position your leverage. 73, that's at 95, 104, and that's 80. You want to use 100. You want to risk $100. 85. And plus charges. So that's how to do what? That's how you do your position sizing. 123x. You just need to keep adjusting it till you have what? Till you have the amount you want to risk. So we are going to do what? We are going to, we've already placed our stop loss. We've also added our take profit. So we are going to do the placing now, and we're going to have it this way: open short, and you confirm. You can see the order has just been added. So that's basically how to do your position sizing, stop loss placement, and your take profit strategy. I told you that your take profit strategy should always be at what? At the 90% rule of the reversal pattern that you are working with. Is that clear? So what is trailing stop loss? Yeah, trailing stop loss is one of the most important thing to also know as well, because this is going to help you to do what? To move ahead of time, and that won't make you do what? Risk or open your risk for what? For more risk. You already risk about $100, and you want to trail your stop loss. This is how I manage my own trade. Let's assume I place a trade, and I'm currently running on 2%, or let me just say 1%. All I just have to do is to move my stop loss to my breaking even. Now I'm at breaking even, and whenever I'm at breaking even, I'm on zero. I'm not risking anything, and I'm not doing what? I'm not losing anything, and I'm not gaining anything at that period of time. So you now place that trade. That your trade moved about 3%. Now you can move that your breaking even to 1%. That's how to trade your stop loss. And if you are a swing trader and you want to trail your stop loss, you have to make use of your 4 hours time frame. You get in using your price action pattern. The next time you are trailing that stop loss is going to be when you have, let's assume the market is trending to the downside. The next time you are going to trail that your stop loss is whenever you have a reversal pattern that did what? That move according to the trend you just entered. Let me see if I can get a chart work for that. I'm not going to take price back to that point so we can all see together. I think, okay, do we have something here? Let's try BTC so that I can explain that trailing stop loss. Well, okay, let's use BTC as a case study. Let's use BTC as a case study. Okay, let's take price back to this point here. So I'm taking this price back for the sake of okay, Robert Donald, I'm just getting your text now, and then I'm going to do that. ICNT USDT. All right, we are going to touch that now before I explain the trailing stop loss. Okay, let me attend to that right away. Alright, so for that explanation, for the ICNT explanation, I'm going to be taking it from the 4 hours time frame, so you can probably see if you can get any entry. Looks like this is a new launched token that has not really lasted that long. So first thing first, let's check for our resistance and support level, and we have all these. That looks like we are moving sideways already. Now we are currently at this resistance level, and we need to get to our support level. So from the 4 hours time frame, we need to check for a reversal pattern, a reversal strategy, and we have that. And from this now, we haven't completed this point. Okay, the 1 hour time frame. All right, Donald, I think what we're having here, from the 4 hours time frame, you should be looking for a sell opportunity. And if at all you are going to be taking any buy trade on this particular pair, you need to wait for a proper confirmation, continuation to the upside. But from the information I have gathered so far, from the 4 hours time frame down to the 1 hour time frame, all you just have to wait for is your continuation to the downside. We've already gotten this rising wedge, another rising wedge, which might happen that we break this to form a double top right here. So if you now form that double top, because this approach is already is already stepping up to this upside to form a double top. So if you form a double top there, you should be expecting something like this to continue to the downside. You wait for any of the price action pattern that we've talked about. So you are going to have something like this. If you don't have anything like this, I will advise you to just wait for you to just have a proper continuation to the downside. So you should be looking out for a bearish flag, a bearish steep pattern, or a timing flag. That is going to give you an edge, a confirmation to sell, and your first take profit will be at 0.32. And if it happens that we break this resistance here, resistance for this pattern, if we break it, just wait for a continuation to the upside. But from what I'm looking at currently on my 1 hour time frame, you just need to wait for the first impulse, just like this. Just need to wait for something like this right here. You wait for the first impulse down, because this is a steep pattern to the upside. We might just break this point because we haven't started the trend down already. You wait for something like this, and then you now wait for continuation this way. So you get in at this point, you have your SL above like this, and your target is going to be here or here. So you're gonna have about 1:5 from there. I hope I have answered your question that way. All right, you got that. So just wait. So back to BTC USDT. I was trying to explain how to trade your stop loss so you can manage your trade properly. So let's take price back to where we are. Let's cut it down here. Alright, we are there now. So basically, I want to teach you how to trade your stop loss as a swing trader, as a daily trader, or even if you are a scalper. I don't really think you need to trade your stop loss, because you people only spend about 5 to 15 minutes on the chart. You are done with what you are there to do. You've taken your profit and you've you've actually probably go your way. So I don't really think you're gonna be needing that part. So the part of trailing stop loss is meant for people that they trade, or probably people that swing their trade. So back to business. So you have all this, you open your chart and this is what you are seeing. This is your reversal strategy that is telling you that BTC is going to sell towards to the 90% rule. So you have it this way. You have this your inner resistance, and currently price is below that. Price is reacting below that. So you have this your what? You have this your rising. You have this your steep pattern, and from that you have your double top inside that place. You see that every detail matters. So you enter this particular trade with this money star here. So you have your SL above. So let's play that so I can show you how to trail your stop loss. So let's play that together. Okay, this is already 1%. Yeah. So you need to do what? You need to move your entry to breaking even. That is zero. At zero. First thing first, immediately your trade started moving at 1%. Let's assume you have a total of $1,000 in your portfolio, and you are risking 1%. If you are risking 1% of that on every trade, that is, you are risking $10 per trade. So you place this trade, and this trade is already moving on 1%. That 1% of your total risk is $10. Now you move to breaking even. That is, you are not risking anything again. You still have that 1% running. You've not taken partial. It's just breaking even. So immediately you move that, you are basically at zero. The only thing you are moving with now is the money the market did what the market gives to you. So let's continue with that. Don't forget, our target for this trade now is at this support level, because this is a reversal pattern to the upside, and we broke the support, we broke the resistance level, and now we are back inside the zone. So we must get to this point before we can consider any other thing, and that is about 6.7 there. You can see we were close to the breaking even, but we were not taking out, right? So okay, immediately we broke the what? We broke the support level of this steep pattern. What do you need to do there? I want to teach you how to trail your stop loss from your breaking even down to securing some certain percentage. Now you are going to move this your entry to 90% of what? Of this body, of this price action pattern. So your breaking even will now be at 1.7. That's how you keep trailing it. First thing was from the from breaking even to from stop loss to breaking even. Now you are now going to move from breaking even to securing about 1.7% of the total profit that is running. So we already moved to breaking even this way. Let's play that. The breaking even is here, don't forget though. It's at 1.7, 90% of that steep pattern. Okay, we break this little correction now, so you have to trail your stop loss to this point. Give it a little room as well. So we've secured about 2.5. And that was how we got to our stop loss. So let's assume this trade wanted to go against you. From this particular point now, the market trends to this side, and then it did not respect this valued area, yeah, and we started trending to the upside this way. Let's assume we got rejected like this. We trend, and we tap it into this place. We might return to the downside this way. Do you get the point now? So that is how to do it, to keep trailing your stop loss. Now we've broken through that support level. Now let's see how we can manage that as well. Let me clear all this. So your this thing now, you're not going to move this to the 90% through of this body as well. So you have what already secured about 5%. Yeah, secured about 5%. Let's play that, and boom, that's how you just be kicked out. So you have to go home with what, 5%. So that's how to trail your stop loss. I hope you all understand. And see there, that is another entry for the sell there. I will have actually say okay, for swing trader, for you to trail your stop loss, you always need to wait for a new occurring pattern, a new occurring price action pattern. That is where you are now going to put your stop loss again. Do you get it now? Something like this now. You placed your first entry here. Let's assume you want to swing this trade to the 90% through of this pattern here, which is down here now. You want to swing it to this support level. You enter your first entry here. This was your first entry. All you are owing this market movement now is breaking even, just in case. So you have to leave a lot running. And one thing is, if your emotion does not carry this, don't bother going into it, because if you try it, let's assume you were running at 5% already, and now the 5% comes back to your breaking even, you will not be happy with it because you wasted all those 5%. But as a swing trader, for you to trail your stop loss, after you move to your breaking even, you need to wait for the next occurring pattern, price action pattern, before you can trail anything, before you move anything. So like what just happened here on this chart now, your SL will now be above this point. This is where you trail your SL to, while you leave all these things to do what? To run again. So you allow it to play. And that is how you are going to be taken out of what? You are going to be taken out of 3.5%, which is still a cool profit. Yeah. So you are now going to wait for another opportunity to the downside, and this is where another opportunity comes in, and you are going to scale in. But at this point, you will have gone on with about 6%, and you are going to scale in, and that is how you trail your stop loss. As simple as that. But don't leave too much running if your mind cannot really take it. You can see the trade we took on BTC using that strategy, and that's basically how to trail your stop loss. So far so good. On this live section, we've been able to talk about high probability entry mechanism, where you have to consider your price action patterns, your continuation signals, your catalyst driven entries, your reversal strategy, we've also talked about how to time your entry for optimal edge, like the confirmation signal, the multiple time frame alignment, avoiding false breakout, and as well we've talked about how you can place your trade, where you can place your stop loss, how to do your position sizing, and as well we've talked about how to trail your stop loss. I hope, guys and girls, ladies and gentlemen, you'll be able to jot down one or two things that is going to make your trading journey easier and better. And I think this is where we are going to be calling it a day for today, because on placing order, like stop limit and buy limit, I already talked about that yesterday, so you might just check out the live section for yesterday to gain the knowledge you want to have on stop order placement. So I think with that few points of mine, I think I have been able to give you a perfect building foundation or experience to do what, to refine your edge in 2026 market situation and nature. And I think we're gonna see again probably today, maybe in a couple of about 6 hours, or we are going to see each other again, same time, same channel. And we are seeing our video for the very first time, kindly give us a like, subscribe, and also share the channel with your friend. Here we share some educating ideas with everybody that is going to make your trading better and easier in 2026. So thank you for joining. See you guys later, tomorrow or probably today. So do well to enjoy the rest of your day.